So joining me now on more in this space is Jeffrey Lewis. He's a partner at Pantera Capital, focused on the cryptocurrency space and blockchain. Jeffrey, welcome.
Thanks for having me this morning.
Quite a climb for Bitcoin over these past 2 weeks. We've seen these levels before, but what is behind this recent rise?
So if you look, we've been going through these periods where we correlate with risk assets and then we kind of break away. Over the long run, Bitcoin is digital gold, and so it really acts as kind of a hedge against all that volatility and other things. In the last 11 years, in 8 of those 11 years, Bitcoin was the best performing asset in the world, and over the 11-year period, it's the best performing asset in the world. In the 3 years that it wasn't the best, it was the worst. But still, despite that, over the 11 years, it's the best performing asset.
Do you think this is a viable level for Bitcoin at 97,000?
Yeah, there's nothing to stop Bitcoin from ultimately going considerably higher. The early people who understood Bitcoin were mostly like commodity and macro traders. Our founder was a global macro trader. And they saw something really simple about Bitcoin, which is it has a capped supply and constant demand. And so most of us remember that, microeconomics class about supply and demand. So when you have a capped supply for something, but you have demand that essentially continues, all the time, eventually the price goes higher. So there's nothing that would say that, that a lot of the predictions that you see out there of $1 million eventually are not, going to be accurate.
We focus a lot on Bitcoin because I think our viewers probably most closely associate it with the cryptocurrency market, but you're focused on blockchain as well. Where else do you see opportunity in this space?
It's funny, when you talk about crypto as a single kind of asset class, I think you miss the fact that there are really two completely different components of crypto. Bitcoin is like a black hole for like sucking all the energy out of the room and a lot of the money. It has the preponderance of the market cap of the industry. But there really are two different kinds of things to invest in crypto. You have Bitcoin, which is digital gold, and then you have these other projects that are businesses. They're essentially financial technology software businesses that are trying to generate revenue, trying to engage with customers, trying to do normal things like that people are used to in the real world. And I think, it's kind of like if you think about our larger market caps like Solana or Ethereum, you could sort of think of them as being like Cisco. And when do you compare Cisco and a gold bar and think they're the same thing? But somehow we sort of take Bitcoin and these other tokens and we kind of group them together. And as we go forward here with the regulatory changes that we're getting in Washington, there's a real opportunity for the productive part of crypto to shine.
What is that? What's the productive part?
Well, the productive part are the tokens that intend to produce revenue and ultimately distribute that revenue to their stakeholders.
What are some of those tokens?
Solana, Ethereum, the general perception is that crypto is kind of magic and I think there's a tremendous amount of misunderstanding. When people look at crypto, they really need to think about it as something brand new. There's been this discussion in Washington for years about whether cryptocurrencies should be viewed as commodities or as securities. But to me, that's kind of like looking at a website when it was invented and saying, well, it must either be a phone number or a billboard. And it has some of the qualities of a phone number. It lets you get in touch with somebody. It has some of the qualities of a billboard. It lets you put a story up. But obviously a website is neither. And most crypto has some of the qualities of a security and some of the qualities of property, but ultimately it's something else. And I think that's what we're going to see coming out of Washington in the next 6 to 8 months will be rules that are built for crypto and built for our industry, which would allow us, I think, to become a vastly different industry than what we've been over the last few years.
Jeffrey Lewis, he's a partner at Pantera Capital, focused on cryptocurrency and blockchain. Jeffrey, thank you.
Pleasure.